Welcome to the ICAEW Insights podcast.
Hello and welcome to the ICAEW Insights podcast, where we analyse the latest news from the world of accountancy, business and finance. I'm your host, Tom Herbert, and on today's show, we'll be asking how the government's new health and social care levy could affect businesses, practitioners and individuals. We'll look at the rising tide of ransomware and ask whether you should ever pay a ransom. And ahead of Charity Fraud Awareness Week, we'll look at how charities can protect themselves against fraud and what to do should they fall victim to it. But let's start with the big news from Westminster announced earlier this month. As many listeners will already know, national insurance contributions and dividends tax rates will increase by 1.25 percentage points across the UK from April 2022. With the projected $12 billion annual income to be ring-fenced to pay for health and social care. Joining us to fill in a few details around that, I'm delighted once again to welcome Lindsey Wicks, who is Technical Editor, ICAEW Tax Faculty. Hi, Lindsey.
Hi, Tom. Thanks for inviting me back.
There are a few different aspects to the government's new health and social care levy. Can you explain to us what's been announced, first of all?
Well, it's a new tax, but for the first tax year from April 2022, it's going to be a temporary 1.25% increase in national insurance contributions. The revenue raised from this will go directly to support the NHS and equivalent bodies across the UK. Now, it applies to Class 1 national insurance contributions, which is for both employees and employers, Class 1A and Class 1B, which are paid by employers generally on benefits in kind, and also Class 4 national insurance, which is paid by the self-employed. Dividend tax rates are also going to increase by 1.25% from April 2022, and details on that we're expected to have in the finance bill, so it's not going to be enacted by the same bit of legislation for the dividends. But the national insurance increase is actually just a temporary one. So from April 2023, the national insurance rates will return to normal and a new 1.25% levy will come into force on the equivalent amount. So employees, employers, national insurance, the equivalent, and for the self-employed. This will be ring-fenced to support UK health and social care bodies. And the key difference is that when the levy comes into force in April 2023, it will be also extended to those over state pension age. Currently, they don't pay national insurance contributions if they carry on working or in self-employment, but they will from April 2023. And the levy, as you've mentioned, it's designed to raise approximately $11.4 billion each year.
How is this likely to affect individuals, businesses and practitioners?
Well, the government's released some costings. So for individuals, the government estimates that a median basic rate taxpayer, that's somebody earning around £24,100, will pay an extra £180 a year. And for a median higher rate taxpayer, and that's somebody earning £67,100, then they'll pay an extra £715 a year. Also, when it was announced by the Prime Minister, there was a big command paper with lots of details in, and it was estimated that households with the highest 20% of incomes, they would contribute 40 times more than those with the lowest 20% of income. But one thing it does do, it changes the dynamic of the taxation of work. We're always keen to try and make sure that changes affect the employed and self-employed and owner-managed businesses equally. But effectively, this is a 2.5% rise on employment because both employers and employees will be paying the charge. Whereas if it's an owner-manager who can extract profits through dividends, then they could pay 1.25% and the self-employed will only be paying 1.25%. For employers, they're going to see some payroll changes. So from April 2022, they're being asked to put a note on employees' pay slips to effectively flag to them that the extra national insurance that they're paying that year will be going towards the NHS. And then when the new levy comes in from April 2023, we're expecting to see a new line on pay slips showing this extra line of deduction. Businesses also will qualify for existing national insurance exemptions and reliefs. So small businesses who can access the £4,000 employment allowance to cover employer national insurance contribution costs, that will also be extended to the levy, and release from national insurance, for example, for businesses in free ports, businesses hiring apprentices, and those hiring the newly employed veterans, then they'll also qualify for those reliefs. Now, practitioners, we expect to be busy supporting this change, explaining how it's going to work to business. But at the same time, what we've got to realise is that HMRC is also going to be extremely busy. So there's going to be a huge impact on HMRC's project management resource that's possibly going to have to be drawn away from other projects. And one of the things that ICAEW is always keen to ensure that our members have is a decent level of service from HMRC, but just to flag that this could impact on HMRC service levels.
Yeah, a lot going on there, and a topic that I'm sure we will return to in future podcasts. Now, moving away from the health and social care levy to another subject we've discussed on previous pods, the Office for Tax Simplification has published its report on the costs and benefits of moving tax year away from 5th of April. Can you give us a brief outline of what its findings were?
Yeah, I mean, it's a really welcome contribution on looking at the costs and benefits of changing the tax year end. The review didn't set out to make any specific recommendation about whether a change should be made, but it does report information analysis about the issues involved in making a change and what things need to be considered, together with the timing of when change might be best to happen. So the report highlights the clear benefits of changing the tax year to either align it with the calendar year or a calendar month end. And it does flag that a 31st of December year end would be better for global information sharing. And that's also something we've touched on the last podcast in terms of the OECD change for digital platforms, where reporting to a calendar year end and how that was out of sync really with the UK tax system. So the more information is shared globally, then the more it makes sense for that to tie in with our tax year. Obviously, resource-wise, as I've already said, HMRC's project management resources are tight and there's lots of other big projects happening. So the OTS is recommending that any change should be planned to happen after other major projects have happened or taken place. So, for example, the OTS is quite clear to say that it's not reasonable to make any changes before making tax digital for income tax self-assessment comes into force from April 2023. The OTS has also made some specific recommendations about facilitating making tax digital for income tax self-assessment, and it recommends formalising arrangements to allow or even require taxpayers to use a 31st of March cut-off date rather than the 5th of April to calculate their self-employed profits or profit from property income.
Finally, for this mini tax podcast section, to support employers during the pandemic, the government legislated to allow certain small and medium-sized employers to reclaim some or all of their statutory sick pay costs from HMRC via the statutory sick pay rebate scheme. Legislation ending the scheme was recently laid before Parliament. Can you give us a few more details?
So normally, statutory sick pay is a cost that has to be borne by employers. And before coronavirus, it was only paid after a 3-day waiting period. But obviously, to encourage people to self-isolate, the 3-day wait was waived if isolation was because of coronavirus, provided that they did isolate for 4 or more days. Obviously, this was going to push up the cost for employers in paying statutory sick pay, and the real concern was about small employers. So the statutory sick pay rebate scheme was introduced for small employers, and that was those with fewer than 250 employees on the 28th of February 2020. Now that other coronavirus support is coming to an end, so the coronavirus job retention scheme, it's not surprising that this rebate scheme is also coming to an end on the 30th of September. And claims up to the 30th of September have to be made by the 31st of December 2021.
Wonderful. Thank you as ever, Lindsey. And links to all tax faculty stories outlined by Lindsey there can be found on ICAEW Insights and in the show notes to this podcast. Charity Fraud Awareness Week from the 18th to the 22nd of October is an award-winning campaign run by a partnership of charities, regulators, law enforcers and other umbrella bodies. The purpose of the week is to raise awareness of fraud and cybercrime affecting the charity sector and to create a safe space for charities and their supporters to talk about fraud and share good practice. And I'm delighted to be joined by two leading lights of the campaign. First of all, Mia Campbell, who is head of the Fraud Advisory Panel. Hi, Mia.
Hi, Tom.
And Kristina Kopic, who is head of Charity and Voluntary Sector at ICAEW. Hi, Kristina.
Hi, Tom. Thanks for inviting me.
It's a pleasure. So let's start first of all with you, Mia. What type of fraud is there in the charity sector?
Well, I think the first thing to say is that charities are as vulnerable to the same types of fraud as really any other type of organisation, but sometimes can be a little bit more susceptible due to having fewer resources available to them to prevent, detect and respond to fraud. But basically, anything that could affect an organisation, regardless of sector or size, could also impact and affect a charity. A couple of the more common risks to charities in the current environment are probably cybercrime and cyber fraud. Both have sort of come to prevalence over many years and continue to affect charities along with other organisations. And they're sort of the two key risks that we always warn about. In terms of cybercrime, business compromise emails, or phishing emails as they're commonly termed, are designed to trick a member of staff into transferring money or revealing sensitive information, and they often appear to come from a supplier or somebody within the charity itself, such as maybe a chief executive or the finance director. And in research we undertook with the Charity Commission for England and Wales back in mid-2019, business compromise emails were actually the most commonly experienced fraud that was reported to us as part of that research. Of course, there are other forms of cybercrime as well, and I know that the National Cyber Security Centre are warning around ransomware, which is another type of cyber attack that can affect charities, and it's just something to be aware of. And the Cyber Security Centre's website has a great deal of information, really useful, easy to read, easy to understand information about common cyber attacks, not only affecting the sector, but organisations of all shapes and sizes. The other risk I just mentioned very briefly was around insider fraud, and that's a very common risk. The Association of Certified Fraud Examiners, or the ACFE, estimate that organisations lose around 5% of revenue each year to insider fraud alone. That's quite a significant figure, and that's excluding any type of external fraud. And so when we're talking about insider fraud, it can include conflicts of interest, abuse of position, perhaps cash theft, expenses fraud, for example, so quite broad ranging, but the impact can be devastating.
You've mentioned the research there from 2019. I appreciate that it's with the pandemic, it's been quite hard to sort of gather any sort of accurate data on whether COVID-19 has increased the prevalence of fraud in the charity sector. But what are you hearing from charities, from members?
I guess first and foremost, I think the simple fact is there is actually a lot of fraud around nowadays, Tom. You're more likely to become a victim of fraud than you are to become a victim of theft or burglary, for example. I know that Office for National Statistics estimates that there has been about a 24% increase in fraud over the past year. That's quite a significant increase, and that's because the way that we live and work our lives has obviously moved online, and that has created new opportunities for fraudsters and other criminals to exploit, and they've moved a lot of their sort of activities online to respond to the way that we have changed the way we're living our lives. Although I've referred to the research previously mentioned that we did with the Charity Commission back in 2019, I mean, that particular piece of research estimated that 1 in 25 charities would fall victim to fraud within the next 2 years. I think it's fair to say that that has likely been exacerbated by the pandemic and obviously the changes that has brought to the ways that we're living and working. Over the past 18 months, there has been a significant increase, as the ONS statistics show us. Fraud now accounts for more than 40% of all crime, and most of it's committed online. I think it's estimated about 80% of all fraud is cyber-related, so that's quite a substantial amount of fraud now moving online. For the sector itself, it's still very difficult to gauge. I am sure that a lot of charities have seen an increase in phishing attacks in particular, and maybe other types of vulnerability open up. For a lot of organisations, they may not yet see the effects of the way we're operating and working, and some frauds may not come to light for some considerable time. So I think from our perspective, a lot of fraud probably remains still reasonably hidden, and it'll probably be some time before it comes to light. But that doesn't mean we shouldn't take our eye off the ball, and we should always continue to focus on, making sure that we're keeping our organisations as safe and protected as we possibly can.
Kristina, I'm going to come to you now. I know you've done a fair amount of work on internal controls in charities. How can charities protect themselves against fraud?
Yes, Tom, I think that's a really important question because, of course, prevention is much better than cure. And as you've just heard from Mia, charities are certainly not immune to fraud and cybercrime. In fact, they may be more vulnerable because of the reliance on trust and goodwill that some charities might have. So fraud prevention really starts with the right culture. So the charity needs to acknowledge that there is a risk of fraud and also understand the impacts it could have. So, for example, it's not just the financial impact, but also what could be the impact on reputation or also motivation of staff and volunteers. And so it's really important for charities to provide regular fraud awareness training to their teams and also have really good whistleblowing procedures in place so that if some fraud occurs and someone within the organization becomes aware of it, they know exactly what to do. I think the best way to protect your charity is to have a really strong internal financial control framework in place, as you've said, because not only will that help you prevent frauds from occurring, but also if they do, 8 times out of 10, they help you identify the fraud and then make sure it won't happen again and deal with it quickly. So I would really recommend that all charities look at the Charity Commission Guidance CC8 on internal financial controls, because it also comes with a checklist, which will help charities compare their own existing control framework and identify any gaps and then, of course, address those. Quite a lot of these controls are based on the essential principle of segregation of duty. So no single individual should be solely responsible for any single transaction from authorization to completion to review. But really the whole checklist is really helpful just to find out where you stand and where you can improve. And finally, I just want to say that it's really important to also review your control framework regularly. That should be done annually anyway by the trustee board. But if the charity has changed something within their procedures and the way they operate, so for example, at the start of the pandemic, when we first went into lockdown and many charities switched to remote working, perhaps some of the processes have changed. And then it's really important to make sure that your control framework is still protecting you. And as Mia mentioned, fraud is also evolving. So if there are new types of fraud arising or cybercrime, then it's just important that charities continuously check that their control framework still protects them.
As you mentioned, prevention is obviously far better than cure, but should you fall victim to fraud, are there sort of general guidelines on what you should do?
Yeah, there are really good guidelines in place by the Charity Commission. So again, charities can always consult the Charity Commission, which produces good guidance called Tackling Fraud in the Charity Sector. You can find it there. But of course, it's easy for me to say, but as a first tip, I would say stay calm, act quickly, and try and follow your fraud response plan. And perhaps this is a good time to check whether your charity has a fraud response plan, because it's a really helpful thing to put in place so that everybody knows exactly what to do and who to inform should the worst happen. Trustees need to be informed straight away because they have a regulatory duty to report any attempted fraud or successful frauds to the Charity Commission under the serious incident reporting regime. And that will include the details of what occurred, what the charity is going to do about it, and also how it's going to prevent further fraud from occurring. Also, charities should report fraud to the police, and that is really important because trustees have a legal duty to protect the assets of the charity. So any failure to report these incidents to the police could be considered mismanagement by the charity regulator. Finally, use your incident of fraud or attempted fraud as a learning point. So identify what happened, why it happened, how fraud could occur, identify any control weakness that you may have, and then strengthen your internal controls to make sure that it can't happen again.
Thank you very much both. Charity Fraud Awareness Week is 18th to the 22nd of October, and there are also two events that I'd like to draw your attention to. The Managing the Risk of Fraud and Financial Crime webinar will feature Mia and ICAEW's Sophie Wales, among others. That will be broadcast live on the 18th of October at 1 o'clock and will be available shortly afterwards on Catch Up. And for those looking for a more in-depth experience, there is a half-day virtual event on charity governance, the ICAEW's annual update on charity governance for trustees and those working in or for the non-profit sector on the 22nd of October. And you can find details of both of these events and the other websites mentioned by Mia and Kristina in the show notes for this podcast. Now, ransomware attacks have grown hugely in recent years, and the pandemic has increased vulnerabilities of many organisations, with staff working at home, often using personal devices. This led the UK National Cybersecurity Centre to warn in June that the primary key threat is not state actors but cyber criminals, and in particular the threat of ransomware. To unpack this a bit, I'm delighted to be joined by Eleanor Fairford, who is Deputy Director for Incident Management at the National Cybersecurity Centre. Hi Eleanor, thanks for joining us.
Hi Tom, great to be here.
So before we dig too deep, can I start by asking what are the basics of ransomware and how is it distinguishable from other frauds or hacks?
Great. Well, we're seeing that ransomware is an increasingly popular sort of cyber attack that is launched predominantly at the hands of cyber criminals seeking to make a profit for financial gain. So the way that they do it is by finding a way into your computer or your network and then kind of sniffing around to find how you manage it and to find your important information. Then they encrypt the information that they find. They encrypt all of your data, or as far as they are able to, and they then hold it to ransom, and they send you a ransom demand saying that you need to pay a certain amount of money as part of a ransom, and then they will send you the key in order to decrypt that data. So it's holding your data to ransom and only, really holding businesses unable to continue their business whilst their data is in that encrypted state. So threatening and making a profit on the basis of that sort of activity.
And I guess that, in particular, chartered accountants are the sort of key holders and sort of manage a lot of the most sensitive data. So it's definitely important for them to know at least the basics of ransomware, I guess.
Absolutely. Anybody whose data is sensitive or obviously crucial to the functioning of their business will find themselves a potential target for this, not least those who potentially have a profit line that the criminals can attempt to exploit.
And generally, who's being targeted? Is it sort of predominantly small business, big business, governments, all three?
We are seeing all three targeted, absolutely. The business model has really evolved over the past few years, where the cyber actors are increasingly targeting activity towards victims who will pay the ransom. So they're working out based on the type of organisation they are, whether they're more likely to pay, if they've got income that the actors can extract, or if they've got sensitive data that they know that they could successfully hold to ransom. These are good victims from the ransomware attacker's point of view. So we've seen lots of SMEs fall victim, lots of large organisations, including some of these sort of global media stories, such as the Colonial Pipeline attack in the US, and even WannaCry itself in the NHS in the UK was a sort of example as well. And then we've even had a couple of examples of government entities, usually in the form of local authorities, who've also fallen victim to ransomware attacks.
And I guess over the last 18 months, a huge amount has changed in business, and I'm sure that's the same with cyber attacks as well. So how has COVID impacted on ransomware? I'd imagine levels have risen, but have the types of attacks changed?
Yeah, so obviously working in an era of COVID has really increased the threat surface to these sorts of cyber intrusions. I mean, a ransomware attack relies on an external attacker being able to access your network in order to then sort of detonate the ransomware that they wish to deploy. Those external accesses are all the more available in an environment where more and more people are working remotely, where they're potentially dialing into their offices through a remote connection, where there are more trusted networks out there, where people are using virtual private networks or VPNs that can also be hacked. So a lot of the pre-existing vulnerabilities were simply amplified during the COVID period and could be exploited more. And just to add to that, I would say cybercrime is an excellent activity that one can work from home with. So I think many of these otherwise attackers that may have been involved in other sorts of criminal activity potentially turned their mind to more cyber-based activity in the same way as the rest of us did during the COVID lockdown, which would also partially account, I think, for some of the increase in cyber incidents that we have seen.
I guess the big question for a lot of ICAEW members or business owners, should they ever pay the ransom?
So the line from government is very much that we don't encourage or condone the payment of ransoms. Paying ransoms clearly encourages, incentivises the attackers to go on and continue their activity and potentially perpetuates the threat. So we see the payment of ransoms as a problematic contributor to the overall ransomware threat landscape. However, we do also recognise that there are potentially times when businesses may feel they have no other option, and without paying that ransom, they simply won't be able to get back on their feet. And it's a risk of, going bankrupt or losing business completely or paying the ransom. The only cautionary note I would add to that is that even in the event that you do pay the ransom, of course, this is a promise you are receiving from criminals. They will give you the key. That won't necessarily actually happen. And nor does it really help you to understand how the original ransomware attack was launched in the first place. Without an investigation, you won't find out how it happened, and you'll potentially still be vulnerable to future ransomware attacks.
There's quite an interesting line in some of the NCSC guidance that some ransomware attackers research businesses to find out if they've got an insurance policy for ransomware. Is that correct?
Yes, we've heard anecdotal evidence that ransomware attackers will actually quite finely tune the ransom demands that they make according to the amount of cyber insurance or the premium or the coverage that is included in your cyber insurance policy. So where an organisation attempts to negotiate sometimes on the level of ransom that might be paid, the group have been known to say, we know that you have insurance coverage for like a £1 million ransom, therefore that's what we're asking for. So we do know that this is a part of their current methodology.
Is it correct that the ransoms are often payable in cryptocurrency?
Yes, so most of the criminal funds that are obtained through this kind of activity do go through cryptocurrency routes, I think, for the possibility of anonymising the money trail and for getting money out of the country easily and quickly. As with other criminal enterprises, I think the cryptocurrency route is particularly attractive.
I guess we've covered it a little bit in the question on whether businesses should ever pay the ransom, but specifically to pay any ransom, I guess, should businesses look to buy or keep cryptocurrency on the books in reserve to avoid business disruption?
That's a really good question. I think I would say that keeping cryptocurrency in reserve just in case you have to pay a ransom feels like a long way to have to go, and it would be preferable to not pay the ransom in the first place. I'd be hopeful that in a world where a victim organisation had to quickly secure a certain amount of cryptocurrency funding, they would be able to do so without having to keep it in reserve. Preferably, as I've said, ideally organisations would have good enough defences in place and robust enough offline backups, for instance, not to have to pay the ransom. And that really is that's the primary sort of focus of the NCSE's advice and activity.
So if members were looking to get a little more guidance on perhaps how to protect themselves against ransomware or what to do in the eventuality that they are attacked, where should they go? What resources are available?
So obviously we have a full range of advice and guidance on the NCSE's website at ncsc.gov.uk, which fully sets out all the steps you should be taking now to protect yourself as a business, to avoid falling victim to ransomware attacks. And further, there is advice and guidance for what you should do if you find that you are a victim of a ransomware attack and something has happened to you, the sorts of steps that you can take, and also the sort of support that is out there. So NCSC does stand ready to support victims, to help them to avoid paying ransoms and to get back on their feet as quickly as possible, and ensure that the cybersecurity resilience measures are in place to prevent them falling victim again.
Thank you very much, Eleanor. And ICAEW will also be hosting a special series of content for Cybersecurity Week starting on the 11th of October. For more information, check icaew.com/insights and sign up for our ICAEW daily email. And that's all we have time for today. My thanks to all our guests, Lindsey Wicks, Eleanor Fairford, Mia Campbell and Kristina Kopic. Thank you very much for listening, and we hope you'll tune in next time. Bye for now.
We hope you enjoyed this episode. If you want to hear more from ICAEW, subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts.